My name is Max Cagliardi, and we're here live with my co-host David Heikkinen for this week's Talk.Energy Insights. As always, if you're watching this, take a second, hit the subscribe button on YouTube, or you can follow us on your favorite podcast app. And also, we're on the social media platforms. We stream this on LinkedIn. We both have Twitters, so if you want to get out there, if you're not following us already, we'd really appreciate it. David, how you doing this week?
Good afternoon. Doing well. Do you have a new studio? It looks like you don't have the Talk.Energy stuff behind you.
I have it set up for an in-person, so I've got really behind and had like no podcasts in the hopper, so I've grinded out 3, and I've grinded out 2, and I'm going to do another one. They've all been in person, and so I just have the table set up a different way, and I've got another in-person one here in a minute. So I just was like, you know what, I'm just going to sit down with the black backdrop here and just knock it out.
Good stuff. No, it's been a busy week of earnings in the public space, and so I'll just peg us to where the market is. Call it 4,400 in the S&P, up a percent or so. Oil's actually kind of back up to the 72 WTI, 74 Brent. Natty's holding in really well. We can talk about that. Copper's up a little bit, and Bitcoin's had a huge rally. So congratulations on your mining operations. The margins are up 23% in the last week. So that's hopefully it flows through. But no, it's been a good week. One of the things, given you talk a lot about natural gas, and pretty much every one of the big independent natural gas producers has reported with Cabot this morning, and it's interesting to me how much hedges they locked in for 2022, and just imagining what the curve could look like if they wouldn't have put all that pressure on it. I mean, there's a propensity to be 50 to 80% hedge now, and really the only company that hasn't done anything is really Cabot. Some of those are tied to acquisitions, the Alta assets that EQT bought, the Indigo assets that Southwestern bought come with hedges. But it is an interesting time in the gas state. Curious what you're thinking about heading into 2022, and if you have any thoughts on it.
Yeah, I got a lot of battle scars, as do many people in the industry. I don't have we have a physical marketing business, and some of our, we have direct exposure to the price of natural gas and the cash markets. And so I just have, we've talked about this before, but since Ancova has been started, we've had, 7 years now of just kind of getting beat up. There's been a few times where it seems like maybe there was some light at the end of the tunnel, but it's just hard not to have the battle wounds of knowing that you see these kind of, you see this glimpse of a higher gas price environment. And like this, there was a time, the last time I got really optimistic was kind of end of 18. And it was, we saw this really good strength kind of coming out of the shoulder months and then going into the winter. And I think we averaged above $4 in basin in some of these basins just kind of in December, November and December. And so we had this really I was feeling optimistic. And I think the thought at the time was, well, even if it's probably not going to stay at the $4 range, but hopefully we can see some strength. And then I think in January, it was $1 something. And then I think in all of 2019, I believe in the mid-continent, and we marketed gas in other basins too, but the majority of our exposure at that time was in the mid-continent. I think we averaged around $1.19 for that year for the average price. And there was months that year where it was negative. For days, not for the whole month. But we had months that year where it averaged, 30, 40 cents when you took into basis account. And prior to that, we had months of really strong prices. So I just have these battle scars of taking anything for granted. And I'm sure some of these E&Ps do too. Yep. And that may be what's driving some of the behavior.
I think I talk about stocks and write about stocks a lot and cover companies. And so the company decision of locking in cash flows, locking in the ability to pay down debt, being in that position of really security from a rating standpoint, and hindsight of 2020, if you had hedges last year, you had some of the best performance that was out there. And so there's definitely a degree of the corporate decision to lock in hedges isn't what we're really faulting. I think it's the expectation and the hopes of what investors were looking for with the commodity going up. And we told this story internally, and I wrote about it, where our midstream analyst, his name's Michael Cusimano. He's one of 8 kids, and he's the 7th of 8. And
wow.
whenever you're in a family that big, you don't necessarily get a birthday party that's a big party where you have your friends come over and relatives and everybody. And so for his 16th birthday party, it was his first big party where like everybody came over to the house, and like it was a big celebration. And 16-year-old boys, you get visions in their minds of like new cars for their birthday and like being super excited, and the fact that his dad threw a bigger party and like was happy to do it. He was super excited. And then tells the story of like I was told to close my eyes, we're going to walk out front, and like so everybody streams out into the front yard, and Michael's walking out on the front porch with his eyes closed, and dreams of a new car and like starting it up, and and he looks over, and there's a brand new 21 speed Schwinn sitting in the driveway. And so I kind of described it as that was the investor expectation. Like we were all excited, like, man, look at these cash flows, $4 gas for NGL prices at propane, $1.09, $1.12 gallon. Like we're going to make so much money buying these stocks. And so we thought we had a new car sitting in the driveway. And in reality, all these management teams other than Cabot gave us a bike. And we like the bike. The bike's going to be nice. That's going to go down. We can ride around the neighborhood, but it's kind of hard to date that 16-year-old girl with your bike. So I think that's that's kind of where the world came out for us. And
is it bullish though for prices? Is it like a self-fulfilling prophecy because they've locked in kind of a lower margin, and to where then it kind of prevents production from doing what it could otherwise do if these guys were unhedged, in theory? Or is that, am I thinking about that right?
It's 2 ways. And so you think about the amount of pressure they put on the curve with the amount of hedging they did since late May or mid-May when they reported. So, I mean, that's only a few weeks from first quarter reporting to now of like locking in a lot of volumes. And that definitely, you kind of wonder where gas prices actually could have gone if you wouldn't have seen the amount of hedging. But then the other side is as gas prices go up, the cash flows don't happen. And so we're seeing it in the oil companies now. The decisions of 2020, we did a ratio of like hedge losses to cash flow from operations. And there's some companies who have equal hedge losses to their cash flows, through second and third quarter. It dampens their cash flows and dampens what they can reinvest. It's kind of, though, in this world of discipline and hope for discipline, it relieves that temptation of ramping capital spending, and does help the gas markets from a supply standpoint of you don't have the cash flows. But in reality, I actually tend to trust and believe that these companies were going to reduce their debt, reduce their gearing, and really try to be in a position where they can return that cash to shareholders once they get their debt down. And so the hedges just lock in the cash, and that's the reality of it. And hindsight, capital every year is 100% like good decision, bad decisions. And you read on EFT and what signals are being sent from a stock standpoint, disappointing. From a company management standpoint and stability in your organization and stability in operating plans, I can totally see. And your scars are the same scars they had. And so I totally understand that side of the equation.
Yeah, it's it's interesting. I think that this kind of may play into the theme too around some of the private guys, or the guys that are more nimble, or people that are more mom and pop. Like if you don't have to have this quarterly peer review that a lot of these guys have, right? You can maybe lean in on some of these trends a little more, be a little more nimble, and roll the dice slightly versus some of the guys that really have to be under the microscope, like the public guys. And so we'll see if there's a lot of areas in the country where we have a lot of gas. And so if you have the ability, but the flip side of this coin is that there's not a lot of private funding, and the guys that are gas weighted have probably, private and public, have been beat up so much that they're probably not in the best place to get after it and go gangbusters. And so I'm trying to craft a narrative around being bullish for sustainable strength in gas prices. I'm trying to convince myself, and beyond that, I just feel like it's got to be just the fate, just fate has to say that I can't be getting beat up all the time. Like we got to be, my dad has told me, he's been in the industry for a long time. He's a geologist and an engineer. And he's like, what people don't get and what I've seen is that these downturns can last not for years, but for, decade plus sometimes in downturns. And he's like, so people just, it's a long slog, but it's been this last decade's we're getting to the back half of it. It doesn't seem real to me around the reserves in the U.S. if we can't make money producing them like we've talked about. So I think intuitively for the last 7 years, it's felt like gas prices have to start sustaining some floor to just prop things up. But I don't know if we'll ever get there. I want to talk here in a bit on the demand side, but just on that ramble that I just had, any other thoughts?
I think that the gas is still a weather bet. And so like one warm winter or one cold winter can change everything. And, this whole conversation can change. But the reality is regardless of weather now, the majority of the public companies have locked in 50 to 75% of their price. And so they know what you're going to get. So what you see is what you get. And the only way they could actually get some of the upside is if they drilled more. And I don't think they're going to do it. I don't think there's necessarily the capacity in the pipeline systems until mid next year with things like the MVP pipeline coming online. And so I actually think that basis is a little bit wider right now as well. And so there's definitely a degree of forced discipline, and you actually force the discipline on yourself with the hedges. So I feel all right about supply. I think that the thing that's interesting is it's going to be a question of what happens from an economic standpoint. I feel pretty good about demand. Like I'm still I've talked a lot about oil price. We haven't talked as much about gas, but I still think that there's a better than average shot that we're in the $80 to $90 oil price going into Labor Day. I've also said this to people though, that there's the Delta variant is something that's going to flare up very rapidly. It's going to change behaviors because we'll have hospitals at max levels. If you just look at the UK and the Israeli data, it kind of right around the end of August through September, and then it'll flare down. If you're not vaccinated, you ought to be because you're going to get sick. It's just way more contagious.
You can get sick too if you are. We know a guy we're friends with that's sick right now. He's okay, but he's still sick.
We just moved my mother-in-law and father-in-law into a nursing home, 100% vaccinated, rapid testing. They had 5 breakthrough cases that they just sent an email about on the 28th of 3 people that worked there and 2 people that were in the memory care unit. So fully vaccinated people, that contagion is possible. I think the Israeli data, I've spent some time, 95% protection and efficacy and effectiveness. So efficacy is the trial, effectiveness is in public for every other variant, 6% worse. So that says you're 89% protected in the effectiveness. That's a pretty darn good vaccine. I'm not trying to advocate, vaccine science and COVID. I just think that, we're gonna see, kind of another surge the same way that we saw. We're not going to shut down economies this time. We'll have, unfortunately, I think people, I don't see how we do. There's no political will. There's no desire. No one wants to. Some people will stay at home. We're going to be sending our kids back to school. Luckily, my kids are old enough to be vaccinated, and we're going to see what ends up happening in late August. And a lot of people will be in the hospital again. And the media is not talking about it yet, but 4 weeks from now to 6 weeks from now, when we do this pod, I can say, you can say you're right or wrong, but I think we'll be at record levels for hospitalizations in the Midwest and where you live. And we'll see. But that doesn't change the demand cycle. I think you have this blip down. The markets will maybe have a little bit of weakness, but I think we're going to see big withdrawals from inventories. And if you talk to anybody going to Florida or the coasts, everything's packed. People are driving. People are flying. I had friends. One of the things that's interesting on the demand side, since you brought it up, the U.S. is open, and so if you're an expat, from the UK, you fly to the U.S. for something to do because you can't go home, and so I think we're actually going to see an increase in international tourism into America. Like New York is open again. Like you've got a lot more outdoor dining. But it is essentially we're open for tourism if we have any, and I think that's a good thing for jet fuel. It's a good thing for gasoline. It's a good thing for distillates, and refining runs can draw down pretty darn quickly through turnaround season, which we deferred a lot of turnaround work in 2020. So I I'm still in the bullish oil camp, but I just want people to be aware there's a better chance now for August, September, and most of our clients and most investors are thinking inflation and prices are going to go up, which always worries me when the consensus is Delta doesn't matter. It makes me worry when you're thinking that.
We'll see. So a couple things I'll hit on there. I've tried really hard to not talk too much about COVID and the vaccine. Number one, because I'm tired of it. Number two, tired of reading, seeing it. Number two, it's just it's a topic that seems to be fairly polarizing. I don't think that it should be. A lot of the stuff I think is pretty straightforward, but nevertheless, it is polarizing. People have very strong viewpoints on this whole thing. What I will say, without taking really, I'll just say it out there. I have the vaccine. I'm vaccinated, but I'm not going to tell anybody what to do in this world. I'll just, tell you some things about what I'm hearing, but that are not from the media, which is that I do have doctor friends that are saying that the hospitals are filling up. That's not a joke. It's happening. It's happening here in Oklahoma. I've also had a couple people personally I know pass away from Delta here in the last couple of weeks. One guy in his 50s, mid 50s.
Oh, man.
And then
Sorry to hear
another,
that.
yeah, it's not that I'm very real close with, but people that I know, a friend's dad. And then I had someone else that my wife knew who was in his 70s still, but also passed away, was unvaccinated. So that's the stories that I'm hearing, and I won't take a stance on it, but I do think that, it's real and it's happening. It's hard to see what is, the media sensationalizes everything, right? And then so does social media. That's why I haven't tweeted about this stuff or anything, and I'm okay talking about it on the pod because I feel like we can have nuanced discussions and things aren't taken out of context as much. But that's all happening, and so people just need to be aware of that and, do with it what you will. Obviously my viewpoint, I have it, but what I will say though is that from the demand side, to move back into that and tie it into energy, I do think it's just pent up. I don't see real lockdowns happening. I think the way my doctor friend described it to me, he said if it was up to the medical community, the answer would be yes. If it was up to the business community, the answer is going to be no. And he said if it's up to the politicians, it's probably going to be partisan around these different topics. And so I don't think that there's going to be. It's not going to happen. The demand's just too pent up. I think people just need to take protections for themselves, whatever you deem that may be. But the majority of people, I think, are going to continue living their lives. Certainly in Oklahoma and Texas, we're moving on. And I think that it's real. Demand is pent up, and we'll see around how that affects oil prices. I do think some of this stuff, I'm in the inflation camp, is here to stay, and this is strictly from just the math around the money printing. I think that money's got to go somewhere, and it takes time. But I do see some things cooling off. I'm pretty tied into the real estate side of things. We have a business around that and do a number of different avenues in real estate, and we're seeing residential cooling off a little bit. I mean, it's still pretty. I think that things are sitting a little longer in some instances. The top end things that are priced really, really high are sitting there a little longer than they were. But things that are reasonably priced are still moving very quickly, interest rate driven. So we're seeing that. I do feel like the food and some of these prices, grocery store stuff, I'm still seeing a lot of that inflation flowing through. But we'll see. I don't know how transitory some of these things are going to be. I think they said the other day that transitory doesn't mean the prices are coming back down. It just means that they're not going to keep accelerating at this pace forever, which is, I don't know if that's comforting or not. But
I think one of the quotes I read was World War II was transitory. Yeah. I mean, so there's a degree of, like your dad's comment, of how long things last is longer than, what most people tend to think about. But things come and they pass. And, what's interesting to me on the inflation front is we effectively have just tasked supply chains in very random ways. I was just talking to a friend that is doing work on the ammonia and the fertilizer market, just trying to think that through. And, this is the cascade back of why you have more demand is, right. I guess the Chinese drew down their hog population considerably that they're trying to repopulate. And so then that's an increase in corn demand, which then normally they import corn from South America generally. Well, there's been droughts in South America, so there's actually an increased demand for fertilizer and a call on corn for feed for hogs that were depleted in the last year as the supply chain was taxed. And you had Exxon presenting polyethylene and polypropylene second quarter results were all-time high margins, and rerouting of those products to North America and Europe from Asia, because that's where the demand was and the prices are better and the transport is better. So you get all-time high operating margins there. You have First Solar and Enphase, both solar companies. Enphase makes inverters. They're trying to keep supply chain costs in check, but you're seeing the inflation on the solar side. I mean, it's just really interesting. I call it this check down, and then you're recovering, but you're not back to the same level where we were, and it's just taking a while. But macroeconomically, it's hard to argue against inflation given what happened in the last year. And Howard Marks's memo that he just put out yesterday is worth reading if you're interested in it. Oak Tree Capital, he's not a macro guy. I'm macro around crude oil and natural gas, but I'm micro in how I think about companies and make investments. And he agrees with that. But the reality is it's hard not to see around us, prices going up and employment, getting tighter, which employment and inflation tend to track each other pretty well. Gold's had a little bit of a breakout. It's just it's harder to see the deflationary trends of technology continuing to carry through until we get supply chain kind of back to normal.
Yeah. Supply chain is so complex. I had a guest on yesterday on the solar side, and a distributor here for a lot of these parts and the raw materials. And he was saying that it's been very difficult. They're trying to spool up a new distribution center in Oklahoma, and he's struggling. They're looking at some things, 11 months. It was hey, I tried to order this. They said they were going to give it to me, next year, some period. So he's finally getting things relatively stocked. He's been working on it for a few months. They've got some things in stock, but its prices are going up. He's having to pass that through. He's getting emails consistently saying this price increase here, this price increase here, and he's having to then pass that through to the people that are looking to buy from him. So hearing that, I mean, supply chain is just fascinating, like what you're just talking about with the hogs and then the corn and how the interconnectedness. I don't know if there's a podcast out there that focuses specifically around different supply chains, but that would be really interesting. One, because it's just so interconnected. And I think COVID, more than anything in my life, has, and probably for a lot of people, has put my mental focus on thinking about supply chain, because it's something that's so easy to gloss over. It's why I say that people gloss over on the energy industry and understanding how their energy works is because it's so complex. It's almost like thinking about the universe. I can't wrap my head around that. I'm not even going to go there. But people think about that with energy. They just plug their stuff in and they're I'm not going to think about all the stuff that goes into getting this energy to work. And I feel like supply chain for me has been one of those things that I didn't fully realize the nuances and the interconnectedness. And now that all this has happened, I'm just very interested in it all. But I do think there's some level of it that's it has to work its way out. And you can kind of boil some of these things down, like the pickup truck thing. I put a tweet out that was pretty popular about. I saw a truck that was $90,000, and it's the same truck that I have that I paid less than half of that for. And to be fair, mine was slightly used, but not. Mine was less than a year old with 3,000 miles on it, and I'm seeing a brand new one that's over double the price for what I paid. And I'm that's just crazy. I bought mine 18, 20 months ago, something like that. So I don't know. And people are talking about chips, and you can kind of trace it back to some of these raw materials, but it's a wild time. I think it's got to smooth itself out though in the supply chain at some point. I mean, right?
No, I think it does. That's what I believe. I think we get, all this cycle of we basically, anybody that goes to lean manufacturing or just-in-time manufacturing or any of those concepts, it's effectively what was pushed through on inventory management throughout all systems. And there's some things that are really interesting, and those inventory management might change some. But on the other side, listening to some of the service companies talk, I was just at this unconventional resources technology company. If you're just looking at some of the simple things around wellhead, 3D printing is actually starting to emerge as a way to not have inventory. Basically have a bunch of 3D printers where you can actually print print the equipment that you need, and then you can do that anywhere. So you don't have to truck it anywhere. You just basically have a series of 3D printers. Two of my three kids are going to go to the energy school here in Houston, and they have a whole 3D printer lab now that they're teaching them in high school as freshmen. Like, that's just cool stuff. Like, that's going to change, and that enables, you know, a whole different perspective on inventory management, supply chain management, and you know, I think there's definitely a degree of, you know, that's where the efficiency gains are, and that's the stuff that I keep coming back to. Is like, we've done some things that people think we're going to have to like eliminate demand, and I think we're just going to find better ways to do it efficiently. Like, I think we're going to enable the rest of the world to not have a bunch of, you know, fiber and copper run all over the world. Like in the 2000s, I remember black fiber was what all the CLECs were talking about, because they've got fiber optics that are going to go all across the country for telecom. You know, you'd never do that now. Like, you just you don't need all that, given wireless technology has improved so much, and now we're going to have, you know, satellite internet essentially for the world not that far in the future. And so I'm excited. I think we're living in the best time we've ever seen. I think people get pretty pessimistic about the fact that it's been one of the shittiest years that anybody's had around COVID. You know, it's been hard. I think, though, that looking forward, there's actually a huge opportunity, and that's the reason I like talking about this stuff with you. You seem to look at things a similar way from a younger eye. I've actually got a couple of things coming up, but if you had anything else you wanted to talk about, we can wrap it up in the next few minutes, if we could.
That's the main stuff. I think, you know, I've been enjoying having the guests on. We need to line up a few more guests. I thought that they were really good, the last couple that we had. I've had some ideas around other things we could do. You know, someone was tweeted the other day about having people call in on a live show. They thought that would be fun, and you know, maybe you could have that. We could open up, like, I've got this new Roadcaster. Maybe we could do it where I could hook my phone up to it and have like a Google Voice number or something, and have people call in and ask questions. That might be fun. We need to just keep evolving here.
I know Dan Pickering did like a Twitter live, essentially. Anybody want to ask questions on Twitter? We're both live, and we could effectively answer them on Twitter and do it on the pod. I think that could be an interesting mixed media as well. But that's a cool idea. I mean, I think that the invitations around interviews, wouldn't mind doing a little bit of a longer form. Maybe we can get on your other pod and set up a joint interview with a few friends that are in Oklahoma City, and have kind of a commiseration session around things that are a little more broad. That'd be cool.
Live has its pros and it has its cons too. I mean, there is something to be said. It's a little more relaxed, a little more not on the spot, when you know that you can just edit it or take a break if you need to. But we're coming up against 30 minutes, and we knew we were going to do a relatively short one this week. I think we touched on some interesting stuff. We'll go back to the drawing board and come up with some new and creative things, but appreciate everybody that tunes into these. Again, take a second, hit the subscribe, and you won't miss one. And everybody, have a great weekend.
All right. Thanks, Max. You have a great one, too.
All right. See ya.